What's up, guys? It's Rowan
and Terry
here from Smart TV, bringing you another episode of the HSC Economics Review. So, in this episode, we want to do an update on the Australian economy. We're mindful that we haven't been around for a little while. It's our first video, I believe, for 2023 of the year, first one of the 2023 series. And so we thought the best place to start is to do a bit of an update, a check-in on everything that's been happening with the Australian economy and, give you a really good breakdown of the key stats you need to know. So, where do you want to start, Terry?
I just want to very quickly just welcome, because we haven't done one since last year, all the new Year 12 economics students who are probably watching this. I mean, we obviously, Ron, you've said we also in the past had Year 11 students who are very interested in our content as well. But yeah, a very big welcome and a big shout out to all of you Year 12 students currently completing your course for HSC Economics at the moment. But I reckon we go start with the basics, look at just where we're at as an economy, how things have developed, because there have been just very, very exciting changes, I'll put it that way.
I think you can only say that if you're an economics geek, right? Yeah. Well, let's start maybe with economic growth, right? If we're talking about the basics. So, I think if we sort of take a look at, the Australian economy, we've got some December quarter data that came through, and that showed that we grew in the December quarter by 0.5%, right? Now, overall, that meant that we saw annual growth at 2.7%. What do you make of that, Terry?
Well, I think if you just break that 2.7% figure down, right, like you divide that by 4 quarters, because I just want the students to kind of understand that you get your annual by adding your 4 quarters, in case you did a bit of mathematics. But if you look at 0.5, a quarter of 2.7 should be somewhere about just under 0.7%. So when you look at 0.5, you're going, ooh, we've actually started to slow down a little bit. Mm-hmm. Is that consistent with what some of the predictions have been?
Yeah, I think certainly there's been an expectation of slowdown. Perhaps it hadn't quite hit yet. I mean, obviously the December quarter is often one that, you see a lot of consumption, right? Simply because it's the holiday season. You've got you've got Black Friday, you've got, the Christmas deals, you've got Boxing Day. So there's really an expectation usually that your December quarter is often a pretty strong quarter across the year. So that for that to be slower than the prior 3 quarters definitely started to raise a bit of concern. I think there was also a lot of flooding that occurred, right? So I think, you had flooding in New South Wales, Victoria, South Australia. And I think that probably played a bit of a damping effect. Whether or not, that was the main driver of why we saw it. I mean, I think there's some other things going on that have probably played out. But I think that all had a bit of an impact. What does this mean then moving forward, right? So that's obviously we're looking back. We're looking at 2022 data. What does it mean thinking about 2023?
Well, I think this was to be expected as well. So we're just kind of playing into those expectations. But overall, you look at what the IMF is saying, you look at what even the RBA is saying, you look at what the Treasury is saying. Now, I love basically what this is. You've got all these different bodies who usually have slightly different, little bits of data, but they usually always tell the same story. And that's usually a sign that they're probably on the right track. And the right track at the moment is that we're actually going to have a bit of a slower 2023 and even as 2024 a little bit slower.
That's right.
Well. Yeah.
So just to put that into context, right, IMF identified 1.6% growth for 2023. They expected 1.7 for 2024. So, certainly if we think about, the fact that Australia in the past has usually had a target of 3 to 4%, right, economic growth, it's well below. If we think about the fact that we've come off a couple of years of COVID where we had much lower growth, and yes, we had some recovery, but arguably that period was not that long, right? We are seeing pretty anemic growth forecasts. Yeah. And that's not that dissimilar to RBA, like as Terry highlighted. RBA suggested, look, they're expecting about 1.5% over the next 2 years. So, if anything, IMF are being a little more, bullish on what they think growth is going to look like for Australia. You'd probably anticipate the RBA and the Treasury have a better read, given that they're Australian. Yeah. Exactly. Yeah. What about Treasury? What were they predicting?
So Treasury actually, in their October budget, so they haven't, updated since, we've got a new state government as well. So those things do push things around a little bit. But they've got 1.5%, which is...
So, part of me wonders if that's going to be revised even down.
Yeah.
Right? Because that was it was October last year that they defined that. What I've read has indicated that they don't expect Treasury doesn't expect that will change too much. They think that looks to be pretty similar, so maybe they got it quite right. But I think either way, we're looking at much slower growth coming into 2023.
I just want to add something real quick, Ron. Like, when we started the HSC Economics Review all the way back in 2019, this just feels like we've kind of come back to that. We've regressed to, we've had, obviously you mentioned those years of COVID and then post-COVID recovery. We've just gone back to basically where we were 2018, 2019 in terms of growth. If anything, maybe even a little bit lower.
Yeah, I think a touch lower, because we were probably sitting at like
2.
Yeah, exactly, right? But floating around the 2.
But we've just come back. We've come all the way back.
And I think it's quite interesting, though, because I think that's a really good insight. We're there at a similar level for growth, but the conditions are quite different.
Yes, I was going to,
if we look at it, it's probably a bit of a nice segue that we'll get to in a moment when we look at some of the other areas of the economy. But certainly, inflation is very different. I mean, we had, very low inflation prior. That was the problem. We had too low inflation. We're now in an environment where we've got too high inflation. So I think it definitely very different, and employment's a little different as well. Not substantially so. That's probably the one that's been a little similar. Yeah. But maybe let's just drill in before we get there a little bit more into some of the economic growth, right? And I think some of the big drivers of economic growth are consumption, the degree of like saving that's happening in the economy, and certainly investment and overall confidence. So what's happening with household saving at the moment?
So household saving, as we probably could imagine, you have the consumption that's been recovering, you have the inflation of cost of living that's been absolutely through the roof. It should be no surprise that household savings, despite the cash rate going up to 3.6%, which would normally encourage people to actually save, right? But it's actually gone quite down significantly. So we've gone from 7.1% to just 4.5% in the December quarter, and that was much lower than the year before that, because that was when we were coming off of the COVID lockdowns and people had no choice really but to save their money. That was at 12.9%, so we're now all the way back down at 4.5%.
Yeah, and I think, look, part of that, we'll touch upon that, whether or not it's in this video or in our next one around inflation. I think part of that is that, we are seeing a return of travel. Yeah. So we are seeing a lot of people taking some of that accumulated funds that they might have saved up, and, we're really getting out there and traveling, and that's playing part of it. But certainly it does highlight that we're saving a lot less. And I think what that indicates is that for a lot of families, it's also going to get to a point where they're going to start to really be eating into any accumulated savings, right, that they had, not just being able to save any new income coming through. Now, I think broadly, though, I think some other sort of drivers here, right, that we should sort of look at is probably just what consumer sentiment's like in the economy. And so, again, one of the things that I see a lot of students sleep on in years 11 and 12 and they're not aware of is that you've got the Westpac Consumer Sentiment Index, or to be fair, the Westpac Melbourne Institute, right? And they release data every single month on the consumer sentiment. And so I'd certainly recommend, if you're watching this as a student, to pay attention to it. Check it out. It's a really great data point that you can use when you're trying to get a sense on consumption, because consumption represents 60% of aggregate demand in the Australian economy. So it's the big lever that is going to drive economic performance. So what's been happening here with the consumer sentiment?
Yeah, quite interesting. For me, I guess quite surprising, but maybe not so for you. But we've got an increase of 9.4% in April. Now, I think I just want to touch on this very quickly. It's the consumer sentiment itself is usually quite volatile. Like I think in all the videos we've covered it, you usually have these pretty large percentage swings. But 9.4%, that's actually quite impressive. Mm-hmm. In the month of April. And the argument here is that because we had our first, I guess, like break in the cash rate increases. We had 10 consecutive increases all the way up until April of this year. Once we had that little break, I think people have started to respond quite positively to that news and felt a bit more confident.
That's right. And I think the timing there was also quite important, because they did the sentiment index just, in the days immediately preceding, so it'd be interesting to see end of the month or later in the month how that plays out. I think what's important to highlight is confidence is now at its highest level since June 2022, right? Which on the face of it, like, oh, that sounds great. But really all that's saying is that it's at the highest since we started increasing the interest rates. Surprise, surprise, right? It's still highlighting that it's still below where it was before the RBA started increasing interest rates. Right?
I think that plays into what I was saying earlier. It's a very, very volatile measure. Yeah. I think it's great if you use it, but I think you've got to weigh it up. You've got to say, well, yes, it is a very...
There's limitations, right?
And I think you can build a very dense great argument from that.
Yeah, that's right. And so I think that's where often the average can be helpful, right? When looking at, okay, what is it over time? So, we can see that, like at the moment, the average over, the full history of the survey is about 100, right? Which is pretty much
where it is.
Right on, right?
Yeah.
So at the moment, you can see, okay, like at 85, we're still below that, right? So you can still see at least there that the trend is, since really this year, we've been about 20 points below the trend, right? The average, I should say. So you can draw, I think, good insights at that level, but each month to month, you're going to get a lot of noise. It's going to jump around a lot. So then there's a second part of this as well, which is to also look at business confidence, right? Because that then plays out in terms of like investment in the economy as well. And so that is generally run by NAB. They have a business sentiment index that you can also access. And again, this probably has slightly less bouncing around. It tends to be a little more consistent, just because I guess, maybe businesses are looking at data in terms of future orders that are in the pipeline. They're not quite as volatile, right? Yeah. So if we take a look at this, Terry, what does this tell us at the moment?
I think it's a very similar story in that it's been recovering, but overall still below the kind of long-term trend.
Yeah.
And so it's very similar with the consumer sentiment, the business confidence actually is quite, as we see here, it's actually quite well below the long-run average. Yeah. And so even though it rose 3 points to a -1, it's still a -1.
Yeah.
Yeah.
That's right. And I think what I saw here coming through as well is that, you're starting to see just really different parts of the economy performing differently, right? And that's not a surprise. That's going to happen. Generally they found that, trends in confidence were still quite negative in retail, wholesale, finance, business and property. Right,
just knock them all out. Right?
Yeah, knock them all out, right? Whereas manufacturing, mining, construction, had some positives, right? So I think again you're starting to see that there's different parts of the economy that are going to be responding differently, both to domestic conditions, so you can understand retail, finance, business and property being a little concerned right now, just simply because as household consumption starts dialing back, they tend to be areas that get hit the fastest. So. I think the next thing, if we're trying to unpack economic growth and how the economy is performing, is to really look at trade, right? Given that that's also a contributor to our economic growth. What's been happening on a trade front?
So pretty positive. And I probably would imagine as well, you have the recovery, you have reopening of borders, you have people coming over to Australia again, you have lots more service exports, for tourism, education. And so overall, the big picture is that net trade has actually been quite positive, contributing 1.1% to a GDP. Exports increased 1.1%, while imports fell 4.3%. So remember, just with your net trade, it's the exports minus the imports, and so if you have less imports, you're taking away less from that, so it's going to be more positive.
And so we had like a significant increase as a result in our balance of goods and services, right, over the quarter. So I think a couple of interesting things I saw with this, right, is that one, Australia has reaped the benefits of, in some ways, just the war in Ukraine, right, in terms of the energy sort of crunch globally, right? We've had really great commodity performance. The government's certainly also been really happy with that in terms of increased tax receipts, improving some of their budgetary outcomes, which we'll see in the May budget come through. I'm sure there's going to be more discussion there, and we'll certainly cover some of that as well. I think the other thing definitely is that, it's interesting in terms of I think that fall of imports, okay? And I was trying to think about, okay, well, there's probably a couple of reasons why. Obviously, our service exports have risen, okay? As Terry highlighted, education, travel, students coming in, tourists coming back. But it was interesting for me around the fall of imports, right? Why do you think, and I have a thought about it, but I just want to throw to you first, Terry. Why do you think imports have fallen by 4.3%?
Well, my take on it would just be that I don't think, first of all, the Australian dollar has been particularly strong.
Yep.
And I think, when you think about the level of the buying power of the Aussie dollar, if it reduces, consumers in Australia will typically consider reducing their import level. I also just think that we have been noticing, these RBA cash rate increases starting to creep up on us. And I think there's just been a little bit more wariness in terms of where our disposable income is going.
Yeah, definitely. Look, I'd certainly agree. I think very much I view it as, exactly right. People are being a little more cautious. There's some, just increasing imported inflationary pressure coming as well, right? In terms of the prices of goods. And you see that, and I think we've been seeing that just with shipping costs, right? Like shipping costs now they're starting to normalise again, but certainly over 2022, shipping costs went through the roof. It increased the cost of imported goods. I think, as families are becoming a little more conscious of just the broader cost of living, I think that's all coming through. One of the things I saw as well is that apparently Australians are also not doing as much long-haul travel.
Yeah.
And we're doing shorter travel. So, maybe we're making the trip to New Zealand or Bali or, Southeast Asia, right? We're going shorter, so we're not, as a result, spending as much overall when we are traveling, or we're going to destinations where we've got a little bit more purchasing power, so there's a little bit less of an outflow there. So that's trade. So broadly, on the face of it, the trade position's looking quite good, right? It's probably really been a little bit of, not a leading light, so to speak, but an area of strength. Let's now continue this sort of state of the Australian economy with a bit of a dive down into employment and the labour market. So if we think about employment and the labour market, what's been happening with unemployment?
Pretty boring. I feel like I've seen this number for the last months. It's unemployment. We've got 3.5%. Participation rate still hanging around that 66 to 67% number. So it increased very marginally to 66.8% participation rate in the economy. And so generally just pretty strong. We've got underemployment, underutilization still very similar. So we've got underutilization at 9.6%, underemployment at 6.1%. I think those general bigger employment stats, probably nothing exciting, but I think more to be said about labour productivity though.
Yeah, definitely. I think that's been the thing that has perhaps been quite interesting because we've seen that really dial back, right? So just to pull up some data that we have on it, when we're sort of looking at labour productivity, it's something that the RBA is, not a little concerned about. I mean, certainly I think one of the things that they're mindful of is that one of the ways that we handle wage growth in the market and just inflationary pressure broadly is we can offset that with some productivity growth, right? And so one of the things that they identified, and we're just trying to bring it up, was the fact that our labour productivity, here we go, is basically, it's the same level of labour productivity in the December quarter that was at the same time 3 years earlier, right? So in other words, that means that, we've really gone backwards, and it's compared with an average growth of 1.25% over the previous 3 decades. Okay, so we're really sort of seeing labour productivity grind to a bit of a halt. What do you reckon's going on?
I wish I could give you an answer, and I think a lot of people would actually want to know.
Yeah.
Honestly, when I saw that, my first thought was, does that mean that us going back into the office, when they started bringing everybody back in, does that actually mean that it wasn't
actually a correlation, right?
Was it not as productive as we thought it was?
Well, look, I wonder as well if, you've got a period where people are back, and I reflect on this just in, I think if you've been working from home and you haven't seen as many people and you're back in the office, there's probably a degree of socialisation that is occurring that, you just couldn't do, right? And I just wonder, is that part of it, right?
I think so, because if you your students watching this, you probably think back when you came back to school, you're probably very productive for the first day, maybe the first period. The first period you were back, you're like, oh yeah, ready to go, and then recess came around and you were all just
descended into chaos, right?
Yeah. As a teacher myself, I can definitely say that it took a while for us to kind of get back into
the rhythm, right?
Yeah,
I would imagine there's probably one other factor here at play as well, and I feel like during COVID, while yes, it was a lockdown, if you looked at the rates of illness, they were actually really low, right? Short of the people that were having COVID, of course. Yeah. The flu season was non-existent. We look at it now, we're all out and about. The reality is that, I just wonder if more people are picking up bugs and so forth, and that, that's also impacting productivity.
Yeah.
The one other final thing I would sort of put out there is that when you're getting to this low levels of unemployment, right? Ultimately we thought for how many years, right, that 5% was, the full employment rate. So in other words, we've somehow managed to find another 1.5%. Now, I wonder if there's an element of diminishing returns here. And what I mean by that is that, yes, you get an extra 1.5% in the workforce, but maybe there would have been a reason why they weren't in the workplace before, right? Just in terms of, performance, ability, who knows what, right? And I just wonder if part of it is that, we've got a really tight labour market, employers, they're hiring, and, it's almost sometimes I hear stories where it's almost like we just need someone, right? And, I wonder how that's also playing out in productivity.
Yeah, I think just to touch on, like if we're going to think about COVID, the bigger effects of COVID, I suppose just people come into work. I also think, just with the skills, the fact that we weren't able to bring in as much skilled labour as we were due to, lockdown restrictions and visas and stuff like that. I wonder if the level of the skill is directly correlated with the level of productivity.
But even as well, I would go even a step further, and that's a great insight, Terry. For a lot of people that started roles during COVID, training was quite hard.
Yeah.
I know, for a lot of our team, that were maybe looking for graduate roles, they were work from home. And, that's your first professional role in, an organisation. It's not a great way often. And I know a lot of big companies were complaining about it. They were finding it really hard. And so, I wonder if part of it as well is we've just actually had an erosion in the average, the skill level.
Because I think when COVID was first coming around, we did talk about this in one of our videos, was about the labour scarring, the effects that the COVID would have. Maybe we're just seeing it play out.
That's right. We're starting to see.
We got a little excited, with the recovery, and
we forgot all of that stuff, right? That we said, hey, here's probably what's going to happen. Now it's maybe happening and we just aren't drawing the dots. So look, the final thing in this video we want to just quickly unpack very briefly is inflation. Now, we're going to do a deep dive, so stay tuned. We're going to do an analysis of monetary policy and inflation, but we're mindful that we can't do an update on the state of the Australian economy without at least including a little bit of inflation here as well. So briefly, Terry, what's been going on with inflation?
Okay, so very exciting thing. So I think we talked about, it's growth is similar to what it was back pre-COVID, but this is just another level, right? So CPI for this quarter was 1.9%, which
that would have been a great annual outcome, right?
Just for one quarter though. So if you take all, like I said at the start of this video, you take all 4 quarters, you get all the way up to 7.8%. But again, if you divide that, we've actually started to slow down a little bit, because if you divide the 7.8, we should be, it's a little bit closer to 2.
Yeah, that's
so
right.
We've started to actually slow down a little bit.
Which is positive, right? But I think definitely, this is territory that, we haven't had for decades, right? In terms of the level of inflation. I think what's driving it, domestic holiday travel and accommodation. And we talked about that. That's opening up. That's the return. Electricity. That's been, a major increase and a bit of a supply challenge. And then international holiday travel and accommodation. Well, no surprises. And then, of course, new dwelling purchases by owner-occupiers. Well, the fact that housing has become more expensive. Again, part of that is due to, global supply shortages playing out as well. Again, all of those are things that we can look around the economy, and you as a consumer, right, as a household, can see all of those play out, right? It's not really a big surprise there. Now, I think a couple of little things that I think is interesting is we're definitely seeing inflation slow. Because what the ABS has now done is, in the past they only used to release quarterly inflation data, but because it's become such a key issue, they've moved to monthly indicators. Now again, they update it properly each quarter, but you're getting more of a snapshot, and that's been quite interesting, because if we look at January, it was 7.4. So okay, we're seeing it sort of come down a little, and then we look at February, it was 6.8. Okay, so we are definitely starting to see a little bit of that slowdown there, which is great. But still, 6.8, it's still pretty high. Now, a couple of little quick things I thought, Terry, that would be worth just highlighting in this video, right? Because I know we're going to go into it a little bit later as well. But I guess, if we sort of think about the overall sort of, inflation rate, what are some of the causes of concern around this, and what is the expectation that inflation will look like into the future? Are we still going to be sitting at 7% this year, or is the forecast looking to be a lot less than that?
No, I think we're definitely expecting to go quite a little bit lower.
Yeah.
And I think we'll talk about more of it in the video afterwards. But the expectation is that the RBA doesn't want us really to be at this level for a long period of time. They really want us to return to that inflationary expectations of 2 to 3%.
Yeah.
And they're going to do what they can. And assuming that the general public which is a big assumption, still has the level of confidence and faith that they have had in the RBA in the past, then those inflationary expectations will actually kind of anchor where we head moving forward.
And so that's where, really, the RBA is really looking at a forecast of trying to really get it, again, not maybe quite under into the bracket of 2 to 3, but certainly in the threes, right, is what they're really aiming for over the course of this year and into next year. But they're still expecting inflation to still remain, pretty elevated into 24, 25. They're not expecting it really to go back into the sub 2, right, that we had pre-COVID, right? They are really expecting it probably to look more like the economic growth rates we wanted. It's done a reverse, right, which is definitely not ideal. So I think the inflationary expectation thing is a really important point just to highlight, and that is what the RBA doesn't want us to get used to is if we as an economy and as consumers get used to like 7%, right, let's say, the problem is it starts distorting decision making, right, in really significant ways. It starts distorting our decisions on what we buy, what we save, when we buy, right, but also certainly as well from a perspective of how firms are going to operate and plan. And so I think that's why what they're trying to do, and it does really feel like they're dropping the hammer in terms of the rate at which they are, escalating interest rates, is that I think they're really conscious of not wanting those expectations to set in, because I think that's where things get dangerous. So, look, there you have it. I think a quick update, maybe it's not that quick, on the Australian economy and the state of the economy. And what we've tried to do is give you a sense of where we've been, but also really what's probably coming over the course of this year. Now, we will do another video, so stay tuned. We'll have a deep dive on monetary policy and inflation, some analysis. With the budget coming up soon as well, we're going to have our annual budget update where we'll do a deep dive into the budget. And that'll be an interesting one because we've got a new government in place. We've got some new priorities. We've obviously got a very different set of economic conditions. So that's going to be a really interesting update as well. So if you haven't, hit subscribe to the channel so you can stay up to date with further videos like this. And if you need support, you're taking Year 11 or Year 12 economics and you're like, economics is great, but it's really hard and all of this stuff is doing my head in, don't be shy, get in touch with the team at ArtistSmart. We've got an incredible team of teachers and tutors to support you in the HSC and the prelim HSC economics